What's up, guys? Welcome back to another video. So I'm just gonna jump right into today's topic. We're gonna be talking about Riot Blockchain's earnings. So essentially, they said it was gonna be next week by the 23rd, but apparently it happened yesterday and I wasn't aware. So I know I might be late to this video, but I'm still gonna post it because, why not? Content is content. Also, as a current shareholder for Riot Blockchain, it's good to be in the know. So as of right now, Riot is down 8.94%. It just changed percent, so pretty much almost 9% down in the morning. A total of 82 cents, and trading at $8.36. So right now my current position is 1.6k in Riot. My average cost is $7.66. Thankfully, I've been able to average down, and I'm still up like 10%, almost to 10% overall in my investment. This is pretty much 93% of my portfolio as of right now. So I'm a big believer in Riot Blockchain, and we'll see. So there's a lot of things that has impacted Riot Blockchain as of recently. So pretty much they're still giving an analyst rating of 100% as a buy, but their earnings was pretty much terrible. But it was kind of expected with the fact that Bitcoin prices fell from 60,000 all the way down to like 20,000, and I think it's trading at 23 right now. But we can see that their estimate per share was 3 cents per share, and their actual was negative 50 cents per share, which is a big difference. As you can see right here, we see the stability of Riot. We see how Riot was trending downwards, and then we had this phenomenal earnings right here that beat expectations, and now we have the opposite. We just have polar opposite. There's many factors to why Riot Blockchain is trading lower, because they had a mini rally. They were about up 50-60% in the month and the weekly as well. They're down 15% now, but they were almost at $10, almost $11, my bad. So to start it off, Riot Blockchain sold a lot of their position in their company in order to get liquidity, about 20% pretty much. So they sold at market value $9 to get some liquidity. The reason why, they're trying to expand their base of operations. They've moved a lot of things around. They're no longer in New York. They no longer have co-hosted mining facilities, and they're updating their miners, getting better equipment, and overall increasing their infrastructure. And we see that they're doing some crazy, well, not crazy, but they're thinking outside of the box. They're not only a mining crypto company. They have different things. They have data. Data mining or data storing. They also have an engineering thing, which I'll look more into. But as of right now, pretty much we can see that Riot has secured purchase agreement for additional S19 miners scheduled for delivery and development by Q1 2023, which would be the first earnings of the new year, 2023. So pretty much expected to increase our self-mining hash rate capacity to 12.6 hash rates. So they're slowly growing. So right now hash rate is at 4.2, and miners deployed at 40,000 miners. Stock information, this is all on the Riot website. You can see that they changed the 52-week range. We can see that is from $4 all the way up to $46, and the volume 6.08 million. But the most interesting thing is just the fact that the stock got beat down so much. Well, not so much, because they had a nice rally, almost doubling their value. They were at $10 and they were trading at $6. So it's a pretty nice movement. So let's just say what happened was pretty much Riot diluted their shares in order to get some capital to expand their base of operations, buy more equipment, and they're on road to becoming one of the largest crypto mining, or if like they are already. Just the fact that the amount they mine, the facilities, and just their balance sheets just look phenomenal. So even though they pretty much failed earnings, they still made more revenue in terms of Bitcoin mining than last year. So yeah, so we can see this assets and liabilities. We see that their current assets, they're holding $270 million worth of liquid cash equivalents. So that's really good. The fact that right now cash is hard to borrow, this company's keeping cash on hand, and also they're gonna need this cash and to expand their base of operations, infrastructure, the computers, the technology, and just overall. So pretty much that's important. We can see their total assets are $1.4 billion, which is phenomenal. For $1.4 billion compared to their total liabilities, which is only 147 million. So it's almost let's see, a 1 to 13 ratio. So that's very good to look at these financial planners, or this information right here about assets and liabilities. Again, all this information can be found in the Riot blockchain website. I'll leave a link in the description so you guys can see it. So pretty much Riot reported Q2 2022 results with 72.9 million total revenue and 1,395 bitcoins produced and strengthened financial position. So even though they had bad earnings due to the fact that they sold some positions in their company for liquidity, even though Bitcoin price went down and all that, they still made profit in total revenue and revenue growth. So they're slowly growing their revenue. They're fixing their infrastructure problems. They're growing their miners, and it's pretty interesting to see, like, reported data hosting revenue of 9.8 million. So they have data hosting. We have 16.9 million from engineering segment, but these two are not making their money yet. They're either breaking even or losing money as of right now. But when they combine all these aspects, this company will be producing some very good services. Pretty much increased Bitcoin productivity by 107% during the 3-month period of June 30th, 2022, as compared to 675 Bitcoin during the same 3-month period in 2021. So we have an 107% growth in terms of Bitcoin mining. You're comparing 675 Bitcoin at the price, it was probably like what, 50, 60, $40,000 to now it's 20 something, and they were able to mine 1,395 of it, almost doubling, or 2.5 the amount of Bitcoin in 1 year. So that's pretty impressive. So reported 496.4 million current assets of the June 30th, 2022, with $270 million in cash in hand, up from 1.1360 million at the end of Q1. And then 6,600 unaudited Bitcoin by the company's self-mining operations. You can see, even though earnings was bad, you see the movement in the company in terms of they're making plays for the long term. They're increasing their revenue. They have cash in hand, expanding operations, self-mining. And yeah, I think Riot blockchain is on its way to becoming the largest, if not already, biggest Bitcoin mining or just mining operations out there. The fact that they moved to Texas, cheaper electricity, reduces cost and all that. So yeah, that's pretty much today's video, guys. Appreciate it. I would really like if you guys could subscribe. We're so close to the goal of 100 subs. I know we can make it. We're currently at 93. I know we got it. But yeah, appreciate it. If you want to see more videos, just remember to leave a like, comment, and just let me know what you want to watch next. If there's anything in particular you don't know yet, I can do some research and upload a video for you guys. Thank you, and I'll see you in the next one. Peace.